What's going on, everybody? My name is Palmer. Well, my name is Carrie, but most of you probably know me as Palmer. And today I'm going to be hopefully explaining a little bit my system, my method, my strategy, whatever you want to call it. Get a lot of questions about it. So hopefully this video will kind of explain what I'm looking for and how I use it, and why I use it the way I do, and things like that. Obviously, just like any other strategy or method or edge or whatever you want to call it, it's not foolproof. And I kind of tailor made it myself for me. It helps me a lot with some of the things that I'm weak in, some of the areas I have flaws, like chasing, oversizing, not being patient, shaking out, things like that. This strategy and setting myself up the way that I do, using this method I'll show you here, helps me with a lot of those issues. It takes a lot of emotions out of it. It takes a lot of your head out of it, and you simply just execute the buttons and then let your stops and your profit targets and stuff like that do the rest. I guess a little bit about me first is I started trading back in March of 2020. I did really well at first. I caught like the Kodak nonsense and things like that. Thought I was way better than I was. Proceeded to lose a lot, thinking, trying to teach myself. Stumbled into Atlas, I think 2 months after that, or maybe 3 is, I think, June. And I found myself in the scalp room where I was more interested in scalping. I kind of understood that a little bit better. I understood that idea. I didn't have a whole lot of money, so I was interested in penny stocks, which is the scalp team at the time. So back in that point in time, there was no Momo chat and Momo floor. It was just scalp chat, and there wasn't a ton of us, but it was a really awesome room, and I learned so much so quickly. Now, unfortunately, though, the risk management and the discipline and the rule following and all that stuff, I really struggled with. And Rodisa can't teach you that. Trog can't teach you that. Nola, Javicha, Maple, no amount of charts people post in chat are gonna make you better at that. Those are things that you have to make better. You have to improve yourself, or you have to lose. I mean, that's really it. There's not a whole lot of alternatives. Thankfully, I kind of built this system to help myself in those areas so that I would be more inclined to follow those rules. And it's helped a lot. So I do really enjoy it. I really like trading this way. It's the only way I trade small caps. And it's very specific. It's very like the entries have to look a certain way. And if they don't, I don't take a trade. Sometimes I take one trade a day. Sometimes I take, 2 or 3 trades on the same ticker. Sometimes, I take, today I took like 8. I mean, it's going to vary a lot. Now, granted, the market is not super hot right now, and there's not a ton of plays to take anyways, but I've done really, really well these past 3 weeks, despite the market being pretty unfavorable right now, because in large part because my system is so selective. Like, it only works with a certain amount of things, so I don't even look at the rest of it, which keeps me from playing things I probably shouldn't be. I noticed that a lot of people in chat, in the Momo chat and stuff like that, will be like, look at this stock, I think it's at its bottom, and I'll look at it and it's like sold off all day. And I'm like, why are you even looking at that? You have no business being in that play. I mean, these are penny stocks, these are small caps, and you have to remember that this isn't Tesla. Nobody's buying fucking EBON at 518 and being like, well, it's EBON. It'll probably be worth 518 if I just hold it for a couple of years. Nobody does that for small caps, right? Because it's just not realistic. So you don't even have that safety net of like, well, I bought Tesla at 750 and it's at 700 now, but it's Tesla. It'll probably go up. So you can't you can't do that in these garbage company small caps. So if it's not already moving in your favor and going with the trend, then I personally don't play it. I don't recommend the new people play it either. Another thing I don't recommend new people to do is actually 2 things. The first is don't trade the open. With this system, I don't trade the open anyways because it is kind of pattern centric, and it works off of I identify zones based off of like previous highs, previous lows, wicks, indicators, key levels, stuff like that. So I need patterns to kind of start to form. So I usually don't trade the first 10 to 15 minutes anyways. I'll usually drink my coffee. I'll have a list of 5 or 6 things I watch into the open to see what moves in the way that lends itself to my method, and I'll remove everything that doesn't. And the next thing I don't recommend new people do is to trade anything that halts. Don't get caught in halts. That's I know it's so exciting. I know that you want to so bad because you're like, well, if I get lucky, I can make so much money so quick because this thing is going ballistic. Just don't. I mean, the chances of you getting lucky, and being able to get out quick enough if you do get lucky it's just not worth the trouble. I don't personally even trade halts now. I'll trade like if a ticker halted at 9, I might trade it at 2 in the afternoon, or whatever. But don't be caught up in the action of a halt. I know that it's. I know, dude. I know. I've been there. I've been burned many a times. I know how it feels. Just don't even bother. There's good setups elsewhere that you can kind of mitigate risk and control what you're looking for. So just play to your strengths. And back to about me. I actually did blow up an account in my first account in July. August or September. And I went to Nola and Rodisa and Javicha and Trog and Bear and all those guys. And I was like, yeah, listen, I'm going to be stepping away for a while. I'm out of money. I blew up. They tried to warn me, hey, do this, start small, do a cash account, blah, blah, blah. But I swung for the fences and I had no business doing so. I wanted to be rich the next day. I was already thinking about the new car I was going to buy because I got in COVID when you could buy anything and do well. And, I have no shame about blowing up an account. I know a lot of people do. It's not a requirement, so don't think that you have to. But, it definitely gave me a slap in the face where I was like, well, I'm going to actually have to, like, really grind out and get better at this. And, here we are over a year later or whatever, and, I'm better, I guess. I'm not as bad. That's a better way of putting it. I do well more often than I do poorly now, which is a big difference. And even if I don't, I try my absolute best to make sure that I mitigate, just how badly I do on days where I don't do well. So that's kind of enough about me. We'll jump into the strategy now. I just kind of wanted to preface it by a lot of people I know when I started, I was looking for like, oh, this strategy is the one. This is going to be the one that, just clicks with me and just starts printing money. And that's not how it is, It's just a strategy, just like anybody else's. It is very important to know that this is a scalping trend strategy. It's trend-based, so it's very specific on, what moves can look like. And it's scalp-centric, which means that we're not. I'm not buying at a dip and holding it for all-time highs. That's just not how I do things. I'm a scalper through and through. That's all I ever do. That's all I'm comfortable with. I do it on large caps. I do it on small caps. That's what I do. I scalp. Which is why it's very important to have that distinction between like what Trog does and what Rodisa does and what all those incredible traders who had a lot to do with me becoming a better trader and even stay trading after I blew up that account. Those are my homies, and those people were very, very significant in me continuing to try. And so when people in chat are like, oh, this guy identified this here, or his Trog's entry was different than yours, he said this range and you said this range, they're completely different. They're both momentum based. They both like momentum and volatility, but so does every day trading strategy. I'm scalp centric, very, very, very scalp heavy. That's what I like to do. That's what I'm most comfortable with. Maybe this isn't for you. Maybe you shouldn't be scalping. Maybe you should be shorting. Maybe you should be trading options. I don't know. This is what I do, and it's important to know that there is a distinction between this and what the the large majority of traders who you're going to experience or come into contact with in the Momo floor and chat and whatnot do. So with all that aside, we're going to move over to the charts now. Now you'll have to excuse me. I call this system the 2-5-10 system. That's just a name I come up with because I use the 2, 5, and 10-minute charts. Now you could probably for your intraday short term use like the 1, 2, or 3 here. I like the 2. I probably wouldn't use the 1. I wouldn't use the 1 period. I really dislike 1-minute charts. But it's whatever. The important thing is the 5, the 10, and then a short term. So 10, 5, 2. As far as indicators are concerned, I use the 20 SMA. I think that's a simple moving average. Yeah. And VWAP and the 200 SMA. And that's it. That's all I use. Obviously, we got volume down here, which is, a little bit different, but that's it. I mean, you can use Ripster's clouds. You can use alligators or Bollinger Bands, or you can use whatever you want. Personally, this is what I have on my chart. It lets me, because I will draw zones and stuff on here, and I like for it to not be as cluttered. Ripster's ribbons or the EMA clouds, they're also very great because for trend strategies, it shows that trends are kind of curved like waves, which, I am a big fan of as opposed to just like the straight up, hard angled lines. But yeah, this is how I keep my charts in most cases. So this is actually a play. We'll discuss kind of the overall idea of the strategy. The idea is that on the 10, we're going to see an overall trend. That's why I call this the big picture. So the 10 and the 5, those are my big pictures, right? Oh, what the fuck? Oh, it's when I did that. I realized I wasn't recording after I already started talking. Anyways, so these are the big pictures right here, right? These are the overall, what is the stock doing? Now, right here, the 10, you could use a 15 or 30 or whatever, I guess. But I like the 10. The stock is moving straight up. So this move right here is an uptrend, right? Pretty self-explanatory. This move right here, downtrend, uptrend. And you see how many candles are encapsulated within that time frame? A lot. So cool. Anyways, I will first look at the 2. So when I identified this play today, this is EBON, EBON. I don't trade in the open. I waited 5, 10, 20, 30 minutes to take my first trade. Something like that. Yeah, close to it. And yeah, so what happened was I saw the price moving up right here, right? Boom, boom, boom. This is all you see at this point in time on the 10-minute chart. It would look like this essentially. That's all we would see. And all I would see over here was about right there. And then all I would see there is about right there. And I decided, okay, well, it's moving upwards. It's kind of rounding off here at the top. Where would I like to place a zone? Where would I like the stock to pull back to, where I feel like it's a price where I could have a price target that's reasonable, a stop loss that's reasonable, and not pay too much and not pay too little? So I identified, well, let's try the $0.50 as a level. Boom. Pretty impactful level, as you can see here. The $0.50. And then I chose top of this wick here, if I'm not mistaken. Yep. The body of that candle right there. And that gave me a 5-cent zone within that range. Now I usually don't draw these, I'm gonna get rid of them. So anyways, that's 4. I called it out right about here. I drew this zone and I said, all right, 455 and down to 45. I'm going to play this. I'm going to play this stock. Hopefully, I'd like to see a pullback there. I will add in that zone and I will, obviously hope that it goes up. Now, why do I choose that zone, right? That's, I guess, the biggest thing about like how do I differentiate zones? A lot of different reasons. The first one is, are there any key indicators here? So at the time, price would only be about right there, and I would assume that like when I made this call, it was right here. This is about what we saw, everything to the left. And I saw that the VWAP and the 20 were kind of moving up. I know that this is the $0.50, which is a strong support just historically in any ticker. So I was like, all right, give me a 5 cent range. That's a candle right here. This candle was obviously a pretty key level at one point. This is where price couldn't get past that 455 right here. So we'll call it 5 cent range. This key level, this key level. We have the security of VWAP and the 20 moving through that area as well. So it all kind of meets. So it was an easy identification of an area. Now the next thing is, when it comes to identifying pullback zones, it's very important that I don't identify a zone and try to get into a zone that is too far pulled back, that's too cheap, right? So let's say that I made my zone 4.4 to 4.3 and it came down here to 4.3. Well, on the 5 and on the 10, these candles are down here. What does that big picture trend look like? It's a completely different trend. That's a downtrend. It's no longer trending upwards, if that's the case. If it sells off all the way down here to this zone, sure, it might pull back to this zone, but I don't want any part in that because it's, started trending the wrong direction. So I guess the first thing to remember is to identify a zone where you are comfortable with taking a play ahead of time. The next thing is to make sure that that zone is, not so, I don't want to identify the zone right here, obviously, because that does me no good. It has to be, identify a zone based on some kind of key levels, previous price, based on 5-minute candles, 10-minute candles, what have you, indicators, however you want to develop your zone. But build your zone, and obviously the more experience you get will help you build these faster and more precisely. But I set my zone here, and then the next thing I did was I decided my stop loss. My stop loss is right here, 4.4. Now, why is it at 4.4? Well, like I mentioned earlier, I felt that if 4.4 was reached, that the move had forfeited or jeopardized the quote-unquote big picture trend. Instead of moving upwards, trending upwards like this, it would be all the way down here, and it would be a giant arch, and I would not be comfortable with that trend. It would not be this smooth trending upwards action that we're seeing here. So it would forfeit or jeopardize, the trend. So I know that at that point, the play that I'm going for, this maintaining of trend, has failed. It has no chance. Now, my position size depends on my stop loss. And the way that I figure that is, let's just take round numbers just to make it easier. Let's assume my account is a $5,000 account. I personally, now with the firm account I trade with is a little different, but personally, I only ever risk 2% per trade of my entire account on a single trade. And that doesn't mean that I only use 2% of my buying power or anything like that. I mean, sometimes I use the whole account in a single trade, but I'm still only risking 2%. So let's say that $5,000 is my account size. 2% is $100. So right here, I identify that, this is the area where I think that trend has failed. So I want to be stopped out here. From the low of my box, that's 10 cents. So if I want to maintain that $100 max loss per trade, that 2% of my total account, I have to position size so that gap of 10 cents equates to $100. So that's 1,000 shares. So with that, I've already identified my zone, my stop loss. Now, we're not even in the trade yet. The price is still up here. I've identified my zone and my stop loss. Now, what's my profit target? As it starts to pull back, what do I want to shoot for? Well, I want to shoot for the high of the run, which is this number right here, 475. So let's look. Assuming I get in, somewhere in the middle, it's about a 20 cents and change upside to a 10 cents and change downside. Pretty good odds. Now, one thing that's important about scalping, and this is, I know a lot of people are gonna be like, what? That's crazy. That's not what I was taught. But one thing about scalping is that you don't always have to have a 2-to-1, a 3-to-1 reward to risk. Sometimes it's okay to have a 1-to-1 because you take quick moves in the trend, you're not sitting and holding a position as it goes against you for a long time. So, you cut your losses. I mean, at least you should cut your losses really quickly, have decisive hard stops. I use hard stops. I don't use mental stops. If you're getting tapped out by just pure market movement volatility on a hard stop, then your stop is too tight. That's how my firm taught me. That's how I believe. And, that's what I like to do. It takes a lot of the emotional stress out of it, and that is very, very key to keeping me happy throughout the day. So yeah, I don't always shoot for a 2-to-1 or a 3-to-1 or whatever. In this case, it was my profit target was about 2.5-to-1. But don't get so caught up on that. In a scalping mentality, don't get so caught up on the idea of risk to reward and making it like it's got to be 5-to-1 or whatever. So anyways, I've identified all 3 key points: my zone, my stop loss, and my profit target. So at this point, let's assume price is dipping into my zone. It dips through right here, and it moves up here. Cool. What I actually did on this play, this is a play I took today. What I did is something I like to do called descending bids with increasing size. Now, this isn't for everyone, and I don't even do it on every play. It just depends on, first, if I have the time to do it. Is the stock moving too quickly? Is it approaching my zone really quickly? But it ensures a few things. It ensures that I don't, oops, that's too many. That I don't chase by, I'll explain it here in a second. It helps me to not chase. It helps me to not miss moves so that, I at least got some skin in the game if it's only a quick tap of my zone. So what I do is, after I've identified my 3 key components, the zone, the stop loss, and the profit target, I will set bids here. As the price is starting to move down, let's assume it's right up here coming down, I'll set, again, we go back to my max position size was 1,000 because, again, 2% of my account, $100. My stop is 10 cents. 1,000 shares. I'm going to put a bid of 100 shares right here at the top of my zone, 455. Then I'm going to put 200 down here at 453. Maybe another 200 down here at 452. And then I'm going to put 500 down here at 455. Or I'm sorry, at 45 even. And by doing that, that means that as price, let's assume that price just tinked off the top and went. I'm in 100 shares. I'll make 20 or 30 bucks or whatever. Cool. You're not FOMOing because you're in the move. Nothing to be upset about. You made some money, and I find that helps a lot. I sometimes winning $5 is the difference between chasing and losing, significantly more. At least in my personal case. But in this case, it crashed all the way through, and popped out of my zone, which is okay. I'm not scared because again, I have a stop loss that's already been keyed in. At this point, before price even gets here, I had all these bids set up. I had a profit target and a stop loss. So I literally I could be somewhere else. I could literally go, get my groceries, and that's very important. It's very, very important to me personally, because I have a bad habit of sitting there and watching every tick, especially on 1 minute charts or something. I sit there and I watch every tick and I'm like, oh no, it's gonna go against me. I just know it is. You know what? I'm 6 cents up now. Let's just call it there. That's at least money. And I get so bad about that. So in this case, this system allows me to put in those bids, get my average within my zone. If it comes down to there, my profit target is already there. My stop loss is there. So the worst thing that can happen is it crashes through my zone. It taps me in all those bids and it stops me out for what? The max loss, which was, again, 2% of my account, $100. Which is totally something I've come to terms with. 2% is what I'm willing to live with. That is totally fine. I can make that back and then some with just, one decent play on the next one. Or, we'll get 2 from here. I'll have a huge trade and I'll make, it's important to keep those losses small. I know it's such a cliche or whatever, but I don't ever move my stops. I let the computer do all the work. If it crashes through my bids and just tanks to the stop, then cool, that move wasn't going to work anyways. No reason to move my stop because I've already determined that if it comes down here, this trend is forfeit. And that's my whole system is trends. So I have I have no inclination to move the stop. What good will it do? I'm either right or I'm wrong. It's that simple. And I can literally be making a coffee or something because I have already everything keyed in. And usually I'll have all this done. The bids already entered and processed. The stop already processed. And then once I get tapped in, I just boom, hit enter for the stop. It goes up. And then I'll type in the price target. And then I'll check my phone or something. So anyways, that's something that I really, really like about this method. So I got filled on all of these. I think my average position ended up being 1,000 shares at like 452 or something. Something, the lower bottom half of that zone, which is good. And my profit target right here. So part of the beauty of the 2-5-10 system is how much confidence it can give you by corroborating strength, telling you different information based on different time frames. So let's say that we're right here in this moment. Price comes down to the zone. We're in the zone. Everything's going well. Our stop, our profit target, that's all set. Our bids are all set. Boom, 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 boom. We've been tapped in. All 4 orders. We're in at 1,000 shares at 452. Let's assume that that's Let's assume that's where we're at this moment in time. Okay? So now what is the next step? The next step is to identify whether or not, I think it's going to make a continued movement. No, it either is or it isn't. It's either going to stop me out, it's going to trade sideways, or it's going to go up. In 2 or 3 of those situations, I don't lose any money. So, I'm just sitting here and watching. But I want to see signs of strength. And the reason for that is not so I can be like, oh my God, please reassure me that this is going to work. Please, it's not it at all. What's important is that I will oftentimes add to my winners. So if it looks that like, oh crap, this move's moving up really healthy, lots of volume, it's a really, really good move, then instead of taking profit, I might double my size. But if it's looking really shaky, I might sell it all. If it's looking okay, but I don't want to hold it too long, it's a little choppy, then I'll sell all my size. Those are the things that I look for when I'm currently in the position. Because like I said, otherwise the target and the stop loss, that's already taken care of. I've already decided on it. It's already been all entered in. I'm just sitting and watching to see that, once either objective A, profit target, or objective B is hit, what do I do next? So here, I typed in a Discord. This is my zone. It came here. I saw that it bounced off of bottom of my zone and it closed within it, which is good. As long as it's not closing down here or anything, that's a pretty good sign of strength. We got some higher lows here on these next 2 candles. We're basing right on VWAP, right on that 20, which is meeting right in the middle of my zone. All that looks really good. Then I'll come over here to the 5. I start at the right and I work my way over to the left. We see a beautiful tap off of the 20. Respect of VWAP, respect of the zone, looking really good. Cool. So that gives me confidence. Let's move to the 10. Over here on the 10, maintaining trend. The pullback zone has not jeopardized trend in any way, shape, or form. Boom, we've come down here to the bottom of the zone, which is also the 200 SMA as support. That's a healthy sign. The wick is very long, meaning those dips got bought up. And the bigger time frame, the more impactful. So, to see that up here, really, really solid. And it only, gets backed up by even more solid evidence as I scale the different time frames. Now, as I scan these, just with my eyes visually, I go back and forth. I would never know without having, if I just had a 1 minute chart up real big and a daily or some shit, the SPY maybe in the corner, I would never know that, this move right here where it's like, let's say I'm just seeing these 2 candles. I could be like, oh shit, it's going against me. Huge red candle. This is going to green. It's going to 3-bar play down. I mean, like those are things that go through your head, right? But by having these other time frames open, I can say big picture, the stock is trending up. Big picture, the stock looks like it's going this direction. Over here, big picture, looks like it's a dip and a bounce. That's what I see on this big picture overall. Sit back, take a look at all of it. What's the price of the stock doing? You know, on the large scale, it's going up. You know, it might have these moments of pullbacks and stalling, but big picture is going up. So if I was just looking at a small intraday time frame right here, I'd be much more likely to be shaken out and be like, you know what, just close it. It's not worth the risk. It's going to stop me out, and then I miss everything. So it gives you a lot of confidence. And what I like is it gives me information moving forward. How confident am I in this move? And, you know, I was really confident in this one based on all those reasons I just listed. So when it did break my profit target, you can go to the Discord or whatever and see. I posted in the Discord, I want to see it hold this level. So I created another zone. I think I said 475, I can't remember, 475 to 48, something like that. I have to take a look. But holds this zone beautifully. And as it does, you know, I'll take 200 here, and then 200 here, and then 200 here. So I'm up to, you know, let's 1,300 share. I'm already significantly in the money, right? I'm already, 30 cents in the money. Worst case scenario, I add on my size, it falls off, and I immediately market sell or something right here, and I make, you know, 150 bucks. So I decided to add. It held my zone perfectly, just like I wanted it to. So I, you know, doubled my size. I ended up with, for the sake of explanation, 2,000 shares. And then I scaled out right above 5, my new profit target, the whole dollar. So I made it up, boom, pullback, boom, pullback, boom. And it's important to have these pullbacks, right? Whether you capture them and you get in on them or not, stocks need to pull back. If a stock just skyrockets, nothing but green candles, the odds increase with every green candle that's stacked on top of that the next ones are going to be a series of red. That's just how it works, you know, because people have to take profit. Nobody just buys into infinity. And in these penny stocks, a lot of people will take profit, especially bag holders from when the stock ran a year ago or whatever. So don't ever, you know, think that, you know, it's just going to go and I'm never going to get a chance. There are some tickers that'll do that. That will go and you will never have a chance. But the worst thing you can be in that situation is wrong with an entry that never got filled because you set it too low, which is another bonus to the system. Let's assume that I set my zone down here, ignoring the trend I explained earlier. Let's just say that I set it right here and I set my descending bids and I missed the move. I didn't get tapped in. Well, the worst thing you can be is wrong about your zone and, you know, net $0, plus or minus $0, as opposed to being wrong about, you know, your entry because you chased. It didn't, like, let's say that it didn't come down far enough. It didn't, oh, well, it's not coming down. It's not coming down. Let me just hop in right up here then at 4.5 because it looks like that's, and then it tanks, right? All of a sudden, you know, my system is gone. The worst thing you can be is wrong with a bad entry, right? At least this way, the worst thing I can be is wrong with no entry at all, which is totally okay. Totally livable. Yeah, so, you know, in its simple explanation, that is what it is. I trade with trend. Always want to go with the flow, especially when I'm scalping. I want big money to push the stock up, big picture, down, big picture, up, big picture, down, big picture. And along the way, you know, I'm just going for the ride. You know, I don't ever play reversals. I don't care about if this looks like the top. I don't care about if this looks like the bottom. I am a scalper. And if it looks like, but I make 20 cents off this move, then I'm going to make 20 cents off that move, or I'm going to try to. And I'm going to lose 10 cents if I'm wrong. And then I'm going to move on to the next one. It's very important when you're scalping to remember that not everything has to be a high of the day run. I took a trade on TIRX today. I'll show you. Right here. Oh, I still have my notes from earlier. Let's see. No, just clear them. So I took a trade on TIRX today, right around this level. Yeah, right here. I set my zone down here, 15 down to 4.9. Or 4.8, something like that. I can't remember. think it was 4.8. Anyways, and then I risked 6. Yeah, 14.6, so 20 cents. So if we're using my example from earlier, 500 shares max for $100 max loss. And the reason for that is, again, if price goes that far down, then this trend that I'm looking for right here, you know, is forfeit. It's all the way down here. It's no longer trending upwards. Now, if you wanted a better stop because you're like, no, it's too close, I want it, you know, down here or whatever, then you would just adjust your share size. You take 100 shares or 200 shares or whatever. And so I saw that this was high of the, oh yeah, I got in right over here. So I saw that this was high of the day run. Wait, no. I got in right. Let's see. Yeah. Okay. So I got in right here. This had gone to, yeah, high of the day at this point. And then it pulled back down to 15 key level, down to my zone. My stop loss is here. My profit target was, what do you think? High of the day? Sure. But as it popped up and it got close to high of the day, and then it pulled back a little bit, I said, I'm out. I took the move to 1560 something or other. And then look, I got back in. I didn't hold and be like, oh, you know what? I'll just average down if it goes against me because I want that high a day so bad. For what? The difference of 2 cents, 3 cents? It's just not worth it. Especially because it came back down to my zone again. I added and I took it to high a day. And that's important to know that, like, not every move has to be high a day. It just has to be a move that makes you money. It has to be a move where you identify a zone that you're comfortable with entering, with a stop loss you're comfortable with taking on if it does go against you, and a profit target that's conservative but, you know, approachable. Sometimes I'll set profit targets right below high of days because I expect there, let's say the high day is 15 on a stock. I'll set it at like 14.90 because I expect a lot of back and forth around that 14.90 to 15 range before, you know, either the bears or the bulls win in that case, and I don't want to be a part of that. I just want to take the money all the way up to that point. If it was 30 cents or 10 cents or whatever, so be it. You know, and that, you know, I'm very, like I said, very specific because the strategy has to work a certain way. It has to pull back to a zone and it has to come out of that zone. If it trades infinitely sideways, just close my position. You know, I don't win, I don't gain or lose anything. If it goes against me, I always already have my stop before I even enter. So if it goes against me, I get stopped out. Because like I said, I never enter a trade if I don't already have the stop. So as soon as I get filled, I hit enter and my stop goes where I've planned it. Yeah, I'm messing around. There's very little for me to do in the way of micromanaging positions. I'm either right or I'm wrong. They usually are decided relatively quickly. I don't, unless I'm adding to size, adding to winners, because I expected to keep going up, like the EBON example earlier, because of the different confirmations of strength and zones being respected. Then I'm usually in a trade for anywhere from a minute to maybe a few minutes. I think my average hold time is like, you know, 6 minutes or something like that. I think my longest trade ever was like 32 minutes. Or longest trade this week, rather. So, you know, that's in its simplest form, that's it. Now, I know that it's like, okay, it's easy to look at these tickers, you know, now in hindsight or whatever. And you're right, it is. But these are plays that I called in chat before they, you know, formed. And there's it's easy to see, like, you know, this is for anybody who is like, wow, dude, you're right so often, your accuracy is insane or whatever. You know, it's not. This is not the holy grail of strategies. This is not anything. What happens is that I'll call a zone that's too low, that doesn't get filled. Today it happened on Clove. I called a zone on Clove that it never came back to, and I just didn't take a position. But there was no hooting and hollering about, hey, Palmer, you fucking nailed it. Great zone, great call. Because I never got tapped in. Nothing happened. Just, you know, might as well have never happened. But the next zone I called, which was, you know, about 30 minutes later, I was like, okay, now seeing the price that I've seen, I'm going to raise my zone 20 cents. Now I'll take it 8.6 to 8.4. and then it gets filled, and then it goes, and people were like, "Damn, dude, you're oh my god, you're so good. How do you do it?" Well, you just didn't notice the 2 or 3 times I made the zones beforehand that just didn't work, and that happens, and it's easy to miss. But what's important is that, going back to earlier, is that the worst thing that can happen in that situation is that I just don't get filled. I just the stock keeps going, and it just never comes back to my range, and I lose nothing. And that's helps me a lot, because I have a bad habit of chasing. Historically, I've struggled a lot with it. So I have bad allergies, so I took a Benadryl, and my thought process might be a little scattered and all over the place. If you guys have any questions, feel free to reach out to me. I'll continue to be in Momo Chat. I love trading. I don't trade for a living. I still work a full-time job. Hopefully, that changes by the end of the year or something. But I try to give back what was given to me. Rodisa and Trog and Nola and Maple and Javicha and like all these other people who, I had nothing to offer them as something they could gain. And, it's due to all of them that I even continued to keep trading, and much less, eventually got to a point where I started doing okay. So it's important to remember that it doesn't matter who called what, it doesn't matter what time, it doesn't matter, what strategy was used. If you're making money, that's all that needs to happen. You need to do well for you. You need to worry about your how can you get better? Address the areas you suck at. Chart your losers. That helps a lot, especially with me on large caps and stuff. And you'll see your flaws. And just soak in all the information you can get, because there's a lot of really, really talented traders in the Momo floor and Momo chat that are willing to talk. It's one thing to call out plays, but it's another thing to teach you to be able to identify those plays yourselves. So I guess that's it. I will be around, so whenever you want, hit me up. You can find me in the Discord, and I'm gonna go pass out now. So be well, everybody. Have a great rest of your night.